Be Wealthy and Smart, episode 1205.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the important events going on this week, because there's a lot happening this week in terms of financial markets as well as on the political scene. But we stick to the financial side here. In terms of numbers coming out this week, the all-important Consumer Price Index is coming out tomorrow. Consumer Price Index is telling us how we're doing with inflation and which direction inflation is moving. Should we get a higher number of inflation than we got last month, that would not be seen as a good sign, especially since about 74% of traders, according to the CME's FedWatch tool, are pricing in a 74% chance that there will be no interest rate hike this month. And although many people think that the Fed rate hikes are not completely over, they do think they're going to pause here and not hike rates this month. Any action to the contrary would be a very big shock to the market. Now, the number that people are expecting to see tomorrow is about a 4% annual inflation rate for May. That's down from 4.9% in April. So if that's the case, that would be showing us positive news and a very large drop in the percentage rate change of inflation. So that would be very welcome for the markets. The markets would receive that presumably very well. Then on Wednesday, we get the Fed meeting, and we're going to hear from the Fed what their current opinion is about inflation, unemployment, and the economy. Then on Thursday, we're going to get the unemployment claims report. So we'll find out how many people are employed and unemployed. Did that number go up or down? Where are we in the unemployment situation? Then on Friday, we get the consumer sentiment number. Now, consumer sentiment is really important because it's over 60% of the economy. And so whether consumers are feeling positive and they're spending more, and that is trending upward in a more confident way, or if their sentiment is getting more negative and they're feeling less confident, that could portend less spending in the future, signaling maybe we would go more toward a recession assumption in the future. On top of all of this, on Tuesday in the crypto markets, we have the Hinman emails being released. These are the emails of the former director of the SEC, Securities and Exchange Commission, Division of Corporate Finance. He's the one that gave the free pass to Bitcoin and Ethereum, making a speech and saying in that speech that they were not securities. And after making that speech that Bitcoin and Ethereum were sufficiently decentralized from his point of view, that became the crux of a lot of the Ripple and XRP lawsuit about whether or not XRP is a security. So XRP holders and investors and Ripple shareholders are all waiting with bated breath to see what those emails hold and what is the truth that's coming out. Because we already know there's some form of corruption involved, and we've been told that it's going to be shocking to behold. Now, in spite of all of this news that's coming out this week, the S&P 500 was on track to make a 13-month high close today, and that's good news for investors. But as I've been saying, many investors are still bearish, so they're not fully invested, they're not participating in this rally. I do think that we have some weakness coming later in June that will provide a good buying opportunity if you're looking to get back into the market. That might be your time to buy that low. And while I think we'll have volatility in the fall, I think the low of the year will likely come from this June low that we're going to see. Now, it's interesting to note that research from Bank of America indicates the S&P 500 rises 92% of the time in the 12 months following the start of a new bull market. compared to the historical 75% average over any 12-month period dating back to the 1950s. So we're more likely to see the market rise 92% of the time in the 12 months following the start of a bull market. And my last podcast reported that we just started that new bull market phase. We're up 20% over the lows, which puts us in a new bull market. So on average, markets go up 75% of the time, but after a bear market, they go up 92% of the time. So there you have even more statistical fact to back up the reason why you want to get back into the market and stay fully invested. That's just my opinion. Do your own research. I know there's a lot of people that don't believe that this bull market is for real. But with earnings being stronger than expected, with interest rates, I think, being close to a peak, and with that lag time I've been talking about where those Fed interest rate hikes are going to finally kick in and start that slowness, and we've already seen that with inflation coming down. Should we get some news in the right direction in the future, that's going to help the market a lot. So in my opinion, if you're looking for an entry point, June just might provide the weakness to buy the dip. And if you've been waiting on the sidelines, this might give you the perfect opportunity to get back in and be invested. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And all of my podcasts are on my wealth mentoring library on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.